Talk to me about the importance of the word somewhat and why it moves one of the most liquid markets on the planet.
My personal view on this is that it's a bit of an overreaction. I think it's really just a marking to market. Yes, inflation has come down. We've gone through a string of lower inflation. I don't think it dissuades the Fed from doing what they had planned to do. I think they're still going to hike rates at a very modest pace. They've said so. Balance sheet reduction, I think, is still very, very highly on the cards. As you pointed out, September, probably executed in October. I think the markets were just vulnerable, looking for something maybe a little bit more hawkish, didn't get it, and reacted.
Kathy?
Yeah, I have to agree. The word somewhat's not all that important, and I think it's just acknowledging reality that inflation has come down.
It matters to somebody, and it's going to matter to the Federal Reserve as well if the market carries on fading the Fed and the potential for rate hikes. They're worried about financial stability as well. And the big question coming into yesterday's statement was whether they could really acknowledge what happened with inflation and at the same time not allow the market to get too far away from them.
Now, I think financial stability is a very good point. So let's think about it this way and think about these other asset classes that you're talking about. Look at what happened to the dollar, right? So the dollar, weakens quite a bit. In fact, the dollar, one of the projects that our economics team has gone through is they've looked through the FRB US model, which is the Fed's macroeconomic model for the US. And what they had highlighted is that every time you get a 2% decline in the dollar, that's about the equivalent of a 25 basis point rate cut. The dollar is down 7% on a trade-weighted basis. That is the equivalent of about 3 rate cuts, just based on the dollar. That basically eliminates the recent 3 rate hikes. So even though the Fed is trying to increase interest rates, they're actually not tightening policy at all. Financial conditions remain really easy. You do then all of a sudden get exuberation in other assets. Look at equities, for example.
And Alan